webinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast. The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everybody. Todd here of tradinganalysis.com. Welcome. Just give me a quick sound check. Make sure we're okay. You can see Motive Wave up and the audio sounds okay. All right, perfect. Hey, everybody. Good morning. And we should have Tony Lindsay in the house for Motive Wave. Tony, not yet in the house. No worries. We will press on. All right. Hello, everybody. Let me get my coffee. I'll be right back. Okay. Good morning. Good morning. Good morning. Recording. Good. So just a quick intro. I know some of you are new here. I'll do this very quickly. I am Alex. Good morning. Hello, Alex K. You're back. I love to see you. All right. So just a little bit about me. I am Todd Gordon of tradinganalysis.com. This is my website. And we are a big user of Motive Wave. I've been using Motive Wave software to trade my own account, run my analysis business for a long period of time. Most of the charts, almost all the charts you'll find in my members area are built on Motive Wave. So it's been a pretty integral part of my analysis, and it helps take a seemingly complex form of analysis and really helps you kind of break it down and just make the whole process a little bit easier. So it is Elliott and Fib is a kind of an intense way to look at the markets. It's takes a bit of learning. There's a bit of a learning curve, but with a tool like Motive Wave, it certainly helps you get up and running much quicker and have you pulling reversals in the markets that many others don't see. Good morning, everyone. Oh, thanks. I appreciate that, Alex, about the Twins. Thanks. Alan asks off the bat, when you say you don't care about earnings when you enter an option trade because of Elliott, I never said that, Alan. No, I definitely pay attention to earnings. Going into, I definitely don't trade through earnings unless we purposely do so with options. So, no, I'll do it. And Wells Fargo is a perfect example. We have a Wells Fargo trade on. I can set this one up for you. We are short the financials. And Wells Fargo is coming up into earnings. And actually just literally, I'm sitting here in a suit or in a shirt and tie. I just recorded a video for CNBC in my home studio here talking about this Wells Fargo trade that we're in and how we're going to handle this going into earnings. So, let's kind of start there if that's okay. Yeah, that's no problem, Alan. I wonder, no problem. I'll trade through economic data events, no problem. But earnings and individual stocks, not really. But data, that doesn't bother me. Data doesn't impact the market anymore. Everyone knows the Fed isn't hiking rates in probably our lifetime. So I don't think anyone cares about the data anymore. Yep, no problem. So let's kind of set this trade up. This is just what I did for CNBC just right now. Yeah, Bill, I see you there. If time permits, can you chart Bank of America? All news is good news in QE land. Yeah. Any bad news just says QE keeps going on forever. All good news means QE's worked and will continue on forever. I think that's what we've come down to. It's pretty funny. Yes, on Bank of America, Bill. I'll follow that up once we get done with this Wells Fargo discussion. I'm on once a week. I was actually supposed to be on Squawk Box this morning at 6 a.m. with Kernan, but I couldn't. I just recorded a video at home, but I'm on about once a week. And I was on a set schedule, and now they're kind of rotating me around, which is what they normally do. So they're not doing QE at this time, Chris, but they still have a $4 trillion balance sheet they're doing nothing with, right? And they're not increasing interest rates. So they still remain extremely accommodative. They're not buying bonds right now, but they certainly aren't tightening policy, right? Okay, so let's get into this. And this is what I find kind of interesting. I did this on the daily video, the free video, I think, in Wells Fargo last week. So here's the S&P, and if you just throw the financials on top of the S&P, this should stick out like a sore thumb. So let's make XLF your financials ETF red, and that should stick out to you right there. So financials are big time underperforming where the S&P is going, right? So this is a little bit of intermarket divergence. So S&P makes a new high, and XLF says not so much, makes a lower high. So when you're looking for good stocks to short, this is a pretty good process to use. You can basically find a weak sector to look to find shorts in. And then once you identify resistance in the stock market and it starts to respect the resistance, then you can look to short the underperforming stocks, right? It's trying to find weak sectors and short the weak stocks within those weak sectors once your indexes are at resistance. Okay, and said differently, if the stock market is pulling back into support, the broader stock market is pulling back into support, you want to be armed with strong sectors and the strong stocks within those strong sectors to establish long positions. It's just about making your life easier, right? It's about swimming downstream all day long, shorting weak stocks in down stock markets and buying strong stocks in up stock markets. And that's all we're really doing here. So now let's keep going with this conversation. Wells Fargo will make, I guess I should have made Wells Fargo red, but that's okay. Make them, what color? Let's do purple. Okay, now watch this when I overlay Wells Fargo. Like, you see how simple that is? So Wells Fargo is, I believe, the biggest stock in the XLF. And look how much it's underperforming the XLF. And the XLF, in turn, is underperforming the S&P. And when you combine that with solid Elliott wave analysis that shows us resistance into the S&P, we are net short with our clients. I think we have all short positions to work right now. So we're up some money right now. We're only halfway short, meaning we have half-size positions on, and we're up some money on these shorts. So we're short in Wells Fargo, we're short the Russell, we're short the dollar, we're long gold, and these are two commodity positions that are still remaining that we're going to probably be exiting today. So Wells Fargo is looking just fine on the downside. Let's go to the individual chart of Wells Fargo, and I'll show you where I think we're headed. So here's Wells Fargo up in the daily, and 1, 2, 3, 4, 5, beautiful 5-wave move down. You might say to yourself, well, what's all this in the middle? Well, it's a nice 5-wave move, right? Wave 3 needs to break down into 5 smaller waves. And a lot of times when you see the gaps in a trend, it's usually in that third wave. So this is in the third wave of the third wave situation. Nice wave 4 up, little choppy wave 5 down, and then we're doing A, B, and then we just moved up into C. We did between a 50% and a 61% price retracement of the entire decline from 2015 down to the low. And we also just tagged the 38% price retracement, or sorry, time retracement. Okay. It would have been a little slicker if we tagged 50% price and time, which squaring those two up would have been right here. So right about there, right? 50% price intersects 50% time right there, but that's okay. It doesn't always work perfectly. Instead, we got a 38% time retracement, which matched up with a 50% price retracement. So that's pretty good price and time right there for Wells Fargo to reverse. And we are now heading lower. If this count is correct, and I almost hope I'm wrong, because if it's correct, we should have a push down to 40 in Wells Fargo, which means, a major bank like Wells Fargo losing what would that be? I guess $4.80 would be 10%. So, 15, 18% of its value, that's going to be pretty bad. So we're just taking it kind of one step at a time. We're trying to get down into this zone of support here, which is the 61 to 78.6% retracement of, of the most recent decline. So let me just throw an ellipse over it, and that's going to be our target. Okay. We are coming up into earnings. I believe it's going to be on the 14th of April. Yep. So there's Wells Fargo on the 14th earnings. So we have 8 days to go And part of the reason we like this trade is, let me just borrow a chart from Thinkorswim here because it has implied volatility. Motive Wave doesn't have it. But heading into earnings here in Wells Fargo, we should start to see this implied volatility move up, which if you're long options, which net, we are long options here in the Wells Fargo debit spread. We have a 48-47 debit spread on. We'll take advantage of an increasing implied volatility heading into earnings. We're just looking to get down into the 618 to 786 retracement. If we can get down to this area, we'll have some nice profits in the trade, and then we can figure out if we are in fact headed down in this monster C wave that takes us significantly lower in the price of Wells Fargo. So that's the setup, guys. It's finding a weak sector to short against index resistance, and then finding a weak stock within that weak sector to be short, looking to trade down into technical targets with options, and that's really pretty much it. So that's the Wells Fargo trade. I'll take a look at Bank of America on a request. Dave, if you have a chance, can you explain your chart on gold? Yep. Dave says, everyone is saying it's about to roll over except you and me, and he's referring to gold. I noticed that, Dave. That's pretty funny. I know everyone else is expecting gold to go lower. I don't see it. Yep, gold, yep. Perfect. And there's another request on gold, so yeah, we'll definitely do that. Did Wave Theory see this drop coming in 2015? It did. That's a great question, and it's going to take me a second. Bill, I'm gonna find you a chart. I missed the top in this market by 20 S&P points. I was ready to be short. I'll show you the chart. I'll wait to the end. I won't. If you're still here at the end, I'll go find that chart for a bit. Yes, we were able to call the top in the market. We missed it by 20 S&P points, and that was all based on wave stuff. So if you're still there, I'll show it to you. Dave. Okay. All right. Perfect. Let me hit this Bank of America before I get bogged down in questions, which I love the questions. I just don't want to go in too many different directions yet. Wow, that's actually a weaker chart than Wells Fargo, isn't it? Add steady instrument overlay WFC. No, I guess Wells Fargo is a little weaker in this recent sell-off. So I think it's better to be short Wells than Bank of America. But you can definitely see a 5-wave move. Here's your big third wave in the middle. There's a correction. There's a correction. So it's going to be 1, 2, 3, 4, 5. Looks like we've done a 38% price retracement. You just go blue dot, major swing high to major swing low, blue dot low. It's actually got up to a 50% price retracement, so that's fine. We haven't really been able to break through 13. We're seeing better response in Wells Fargo, but definitely has the ability to roll over. Now, I've watched the futures kind of give away their gains as we're approaching the open, and we actually went negative. So the futures were up, and I kind of feel like futures were stronger. I think they're 2047 in the Globex, and they've been selling off all morning. So I feel like they tried to bid up the market in the Globex and starting to give off, start to roll over. So I think, these stocks have the ability to roll over, but I do think we'll get more bang from the buck than from Wells Fargo. And plus, it's a more expensive stock than Bank, which is only $13. A lot of people ask about gold. Okay, perfect. All right, let me jump into gold. A lot of three requests on gold. I am long gold right now. I have we have the, sorry, subscribers. We have, it's not me. It's we have. Where's my platform? Oh, there we go. Trade. BA, or no, not Bank of America. GLD. What do I have on? I have the, we have the products position. We have the 115, 120 call spread on in GLD out in May. So we got 44 days to go. We're up a little bit of money on it. Starting to come into play here. Gold, here's where I think gold is, and we did a long discussion with this with members yesterday in the member webinar. Kind of interesting, but the push down in gold Let me go out to the daily first, and then I'll move into this chart. I'll give you the context. So here's the big move up in gold. And I think it's kind of funny how gold's in a straight up parabolic move and people want it to go lower. Isn't it kind of funny how that works? So here's where I think gold is. I think it's red 1, 2, and then all of this is a beautiful 5-wave move. 1, 2, 3, triangle 4, up and 5 to complete 3. Remember, your third wave is usually a clean 5-wave move. And here it is. 1, 2, 3, 4, 5. So I think we're now pulling back in red 4, which is of the same degree as this little guy right here. If I'm wrong, which it doesn't really matter, it also could be red 1, 2, and we're still pulling back in red 3 to 4. So it doesn't really matter if whatever this is down here. But this very much looks like a correction. Okay, so we have identified 1226 to 1190 support in gold. And even if you want to keep it simple and get the Elliott wave and fib out of there, I mean, just look, old resistance that's broken will turn to active support. So in this zone, you know, we are continuing to be pretty bullish on gold. FSC stands for fib support zone 1190 to 1226. So let's go back down to the 195-minute chart. And that whole choppy business, guys, you know, this makes me drool to want to be long, okay? This kind of choppy, overlapping, not a lot of conviction on the downside sort of price action looks much different than this, right? So I'm just the simple kind of guy. I don't try to overthink things. When I see hesitant price action on the downside and high degree conviction price action on the upside, that makes me want to buy it. So we had a long discussion yesterday with clients. We went over the 3 main corrections of Elliott, trying to piece together this pretty choppy correction. And the whole game is, guys, with Elliott, is it perfect? No. Is it like shooting darts? No. The whole idea is we're trying to find the end of the correction in order to establish longs just ahead of the new uptrend. And if we get it right, we're going to have premium entries ahead of the next trend. Okay, so no. Is it perfect? Does it get you in at the absolute end of a correction? No. Does that make it imperfect? No. If I had a methodology that says buy here at the end of the correction, you're going to make $1 million today. You know, I don't think I wouldn't be a billionaire. So the whole idea is identifying the price action here using the tools of Elliott and Fib to identify the most likely spot of the correction completion to establish long. So altogether, I think we have the end of wave 4 here. This is the start of wave 1. We just pulled back in 2. We really need to get going here in wave 3, or else this wave 4 will be extended out and we're going to have to try to establish the new uptrend from a little bit later. We're taking a shot here. If it doesn't work, that's fine. I'm going to try it again. But that's what I think's going on. And if the stock market really breaks down, we are in a third of a third position right now, which means we could have an explosive move up. Okay. And anytime you're in a third of a third, which these are big price gains. The last time we saw a third of a third, red 3 of black 3 was this kind of price action. And this is what we live for, right? And the other thing that cracks me up is people say, well, Elliott's no good because it's too subjective. It doesn't tell you when you're going to get in, when the correction's over. Again, I can't help but laugh. But if you had an indicator that told you when this was going to happen every time, like, sign me up. They don't hand out third waves like candy, like to kids on Halloween. They make you work for it. And right now, guys, we're working for it. So we're looking to get this third of a third move up to make some money in gold. Rant over, I promise. I just take it personally, guys. I do. I think people are so lazy and they say, oh, it doesn't work. It doesn't tell me exactly what I want to do and what I want to trade, and I don't have to do any work. Laziness irritates me. You guys are all working hard. You're in the webinar. You're trying to learn, as am I. We're all students of the market. Okay, I promise. Rant over. Okay. Bill says, saw an expert commentator on web a few days ago, feels gold is going up, not down, even with the run so far. Yeah, I mean, I agree. We're just trying to find the end of the correction here. GDX, yep, GDX, sure. Yep, let's take a look at the miners and underlying. I haven't done that in a while. And study instrument overlay. If you don't enjoy the work and you enjoy the process, you're not going to be successful. Wow, yeah, miners are boy, miners are hanging in there pretty well relative to the underlying. That's pretty impressive. Look at that. And look at that divergence. That's interesting because GDX made a new low while gold made a higher low. They both ripped up to the upside, and now GDX is not confirming these slightly lower prices in the underlying. So miners look good. Might have to look at some miners there for long opportunities. But yep, good look there in the GDX. No, I'm not Santelli. Keep going, Santelli. That's pretty funny. Diane says, lazy and self-indulgent, self-indulgent. Give me, just between you and me. Yep. Okay. Hey, man, you got to love what you do. My dad always told me, Todd, do something you love. This life is too short to work at some job that you hate. And he still tells me that to this day. And he loves seeing what I'm doing. And that's great. Okay. Crude is my one kind of it's the one thing kind of getting in the way of my bearish outlook in the market. We are net short this market. And I think crude may have pulled back in a fourth wave. I'm not sure, but we did identify support here, and we're starting to hold it, and I kind of wish we wouldn't. I wish we would break. If crude oil breaks through 35, here's what I'm going to do. Let me show you how to label a 5-wave move, okay? I really hope 35 breaks. And the simplest way to label a 5-wave move is to just look for the biggest corrections in both price and time. Okay, I see kind of a choppy sideways, nothing too clear, but sort of a hesitation in here. And I also see a hesitation in here, right? So if we were to just call that a correction and call this a correction, all right, so we would call this the fourth wave correction, this wave 2, and then just fill in trend waves 1, 3, and 5 around it. Okay, so here's 1, down in 2, up in 3, down in 4, up in 5. If you can identify 2 fairly clean corrections, and it looks like it might be that, you could have a completed 5-wave move. And after every 5-wave move, you should have at least an ABC correction. Okay? And I think we're in a little bit of a bounce here. So my line in the sand for these 2 wave counts is this. Again, I'm looking at my top 2 wave counts in crude. If we fail at $38.43, which is that 50% price retracement, if we start to rally up and then begin to fail, I'm going to look right to this count. But if we break up through 38.5 bucks, the wave 4 actually goes here and not here, and we are going to go up and make new highs, which that could help support the stock market because same thing, we did that overlay with XLF in the S&P. If we overlay crude on the SPY or SPY on crude, look at this. There's a high degree of correlation between these two, but crude oil has gotten very weak here in the last couple of days, where the S&P has not yet gotten as weak as crude. Crude is acting right now as a leading indicator, and the reason the S&P has been up so sharply is because of crude oil, and crude is saying we should be going lower in the S&P. So we are short the market, as I've said a couple times, and I'm hoping this wave count fails, and we'll go over to this one, and we're looking for a much lower drop in the crude oil market. Also related to that is gold. Gold's been trading inverse to the stock market, and if those 2 scenarios that I just laid out for you play out, then gold should be moving up. So we should be able to get down in the $31 to $33 region based on this count here. All right. No, I don't think gold's leading the market, Chris. It was for a while, but I think more crude is now. Gold's trading a little bit more on Fed policy expectations than where the stock market's going. But there is definitely a correlation, but not as strong as crude in the S&P. Okay. A lot of good comments here, guys. Yeah, let's take a look at HYG. I'm not going to do the SPX, Pete. It just trades in, just trades inverse to the S&P. Doesn't really, I mean, I track it over here in my internals chart. But I don't know. You can trade it, to hedge the S&P, but they just trade inverse of one another. If you want me to look at something specific with the VIX, let me know. I'm happy to dive in. But HYG, I think, is a very good one. High yield bond ETF. And this is another one that has a pretty good correlation with the stock market. This one is actually not broken down as much as the S&P is either. And high yield actually trades well with crude oil because of possible defaults in highly leveraged energy companies. So let's just overlay these guys on top of each other. Pretty good there. Oh, let's get rid of this. So this is the HYG in the black and white open candlesticks, the high yield bond ETF. Okay, so pretty good correlation starting here in December of 2015 and then back up. And again, you could throw crude oil on top of there and you'll see a pretty good correlation. And Motiveway is very good, not just at Elliott Wave stuff, but it's very good with the intermarket stuff, overlaying charts. Again, that crude oil market is saying that HYG should be lower. And that means the S&P should be lower if the correlation is still going. So that's interesting. Okay. Hey, Trevor. Auto Elliott. We're going to save that for another time, Trevor, if you don't mind. We're just going to hit the top markets we're focusing on. I had somebody else ask me on. Oh, let me just do the Russell. We are short the Russell as well. We are short the Russell. We have in the IWM, I have a 110, 105 put spread, just a half position on, and we're going to look to get after the other half with confirmation today. This is a nice 5-wave move up in the Russell, which is the small cap. So look for your two biggest corrections. There's a good correction here, and there's a good sideways correction here. Your fourth wave is usually kind of sideways and drawn out, and wave 2 is usually a little bit more directional. This was a very shallow, uncharacteristic wave 2, but that's okay. 1, 2, 3, sideways 4, up in 5. We held fib resistance. We've had 2 down days. We're going to see if we can get follow through on the third day here today. We have not had back-to-back down closes. Oh, yes, we have once right here. Okay, once right there. So that's the Russell. Wow, that half hour went very fast. So let me just finish up with the Russell here. We have wave 4 over here, wave 5 up in the daily. Let's go to the 195-minute chart. And can we count 5 waves inside of this red 5? 1, 2, 3, 4, 5. Okay, we'll even go to the smaller time frame. Here's the 15-minute. Here's the red 4. There's red 5. 1, 2, 3, 4, 5. And we did sell into this fib resistance zone. And we're up some money. I'm down $4 today on my position, so we are kind of flat. All right, guys, so that will be it. Any other questions? Yeah, good question there. 195-minute chart. All it is it's the amount here. Let me get my calculator out. So there's 6.5 hours 6.5 hours in the stock market day, right? Multiply by 60 minutes, 390 minutes in the stock market day. Divide that by 2. That's 195. So you get 2 bars. It's like a half-day bar. And then I also use the 39-minute chart because there's 390 minutes in the stock market day. You just divide that by 10, and 39-minute winds up being 10 perfect bars for the day. Yep. All right, so market's up just a touch here. SPX up 0.1%. NAS up 0.2, 0.1. Bonds down, 30-year bond down 0.33%. Dollar up touch. Crude's up 3%. Watch that crude oil market. That discussion we just had that's super important for where this market's going. That 3%, like I said, I hope my wave count fails and crude heads lower, because if crude is finding a low, stocks are going to stay afloat. Gold's down $7. I think the future is crude. Yeah, we can take a look at Yahoo, sure. Where is it? Let me see if I can just type him in. Sometimes it works, sometimes it doesn't. I thought I had a wave count in Yahoo, but maybe not. Looking pretty strong there on Yahoo. I don't love it. I'd really like to see the correction lower here, and then I can figure out where we are. Kind of a one-way shot. I don't see a clear wave count in there, and unless I have a clear wave count, I can't really control risk, so I'm not going to force it on it. I don't like that these two main corrections, which are highlighted with the blue major swing dots, are overlapping. This correction moves into the territory of this correction, so I don't love the chart. Definitely a strong trend, but I can't define where we are, so it's hard to control risk. Netflix has been kind of a mess lately. I hate Netflix. I told my clients that I hate Netflix. If you guys know, it's always on the wrong side of the market. When the stock market's down, Netflix is up. When the stock market's up, Netflix is down. For me, it's been a pain to trade. I have not had good success with Netflix, so just kind of keep that in mind. We started selling Netflix into this zone. It started to work, but then it came back. I don't have a good feeling on Netflix. I apologize about that. Let me just look at a clean chart and see where we're at. Yeah, Netflix has been a pain in the butt, in my opinion. It's been a real pain. Yeah, I just don't have an opinion on Netflix. I mean, there's definitely a trend down. We're coming back. We're below the 200-day. It looks like we're at a 50% price retracement. No real opinion. I mean, it's better to be selling premium in here, Netflix. I just think Netflix is directionless. I'm trying to trade it on a directional basis on the downside. That hasn't worked, so I think it's better to be premium sellers in here. No, Tony didn't show up today, but that's all right. Yeah, you'll be notified when version 5 of Motive Wave comes out. Yep. When is Netflix earnings? Market Watch. 18th of April. Okay. 18th of April. Okay. Yeah, no opinion on Netflix. It's been tricky for me. All right, guys, we'll leave it there. And Trevor asked where this will be posted. It's always posted. Not always. Most of the time, it's posted on the trading analysis site right here. I will put it under free videos right here. The Motive Wave Wednesday will be there. And then also Tony posts them at Motive Wave. It will be under the video archive for the free Wednesday webinar right there, video archive. So those are the two places you can find those. All right, guys. So thanks. Look at Netflix heading lower as the S&P's up. That's exactly my point. I think Netflix is bonkers. And we'll leave it there. All right, guys, have a great one. And thanks for showing up, and we'll catch you all soon.